A financial services company garnered a delivery volume of approximately 68% yesterday, showing signs of potential upside momentum. Well, that's not all. Carnelian Asset Management picked up a whopping 80 lakh shares, backing their confidence in this turnaround story. So, do you want to know which company I'm talking about? Well, stay tuned to find out. Well, the two companies that I'll be covering today aren't just surviving, well, they're transforming. So let's dive into the two compelling businesses riding the next wave of growth. But before we do that, we have a disclaimer. Any discussion, facts, or writing provided are for informational purposes only and do not constitute a buy or sell recommendation. Please conduct your own due diligence before making any investment decisions. So now we'll head on to the first stock that we've covered for today. It is none other than Edelweiss Financial Services Limited. Edelweiss saw a sharp rise in delivery volume to 68.2% on 20th May 2025, up from 42.9% on the previous day and significantly higher than its monthly average of 59.9%. Well, this spike coincided with institutional buying, none other than Carnelian Asset Management, which acquired 80 lakh shares at 90.4 rupees. It translated into a 0.85% stake in the company, which is actually huge. This surge in investor interest comes as Edelweiss business model evolves, where it is cutting its wholesale NBFC book by 40% and bringing total borrowings under 3,000 crores. Well, these moves aim to improve asset quality, reduce interest cost, and boost financial flexibility. Well, the company was founded in 1995 and it offers a broad range of financial services, which includes investment banking, wealth and asset management, and NBFC lending, operating as a well-diversified financial holding company. Talking about the financials of the company, well, the company posted 2,200 crores in revenue, marking a 15.3% quarter-on-quarter growth. EBITDA margins improved to 5.4% and net profit margins stood at 6.8%, which shows a steady comeback. And looking ahead for the company, well, it is targeting 20 to 25% annual growth in AUM and revenues over the next 5 to 10 years. Its general insurance business is expected to break even by Q4 of FY26, and new products like a specialized investment fund, the acronym is SIF, are being launched to expand its offering and improve profitability. So that was it for Edelweiss Limited, Financial Services Limited, sorry. Now we'll head on to the next company that we've covered for today. The next company is Gabriel India Limited. Well, this company recently reported its Q4 FY25 result, and the results were quite strong, with consolidated revenue increasing by approximately 7.7% year on year to 1,070 crores, and full year FY25 revenue recorded 4,060 crores, growing 20.1% YOY. These impressive numbers came alongside a 39.5% YOY jump in PAT to 68.3 crores and a capex of 128 crores, reflecting the company's growth focus. Well, you will want to know how the growth was fueled. Well, the growth was fueled by several initiatives taken by the company. Number one, launch of a new alloy wheel product line for motorcycles. Number two, introduction of 226 new SKUs. Third is the entry into European e-bike market with prototypes already in discussion. Number four, foray into the solar tracker market with durable dampers set to launch in FY26. And lastly, acquisition of MMAS assets enabling expansion into the gas spring segment with global potential. Talking about the future of the company, well, the company is targeting double-digit EBITDA margins by FY26, and it aims to outperform the two-wheeler industry's 6 to 7% growth. The company's sunroof business plans to reach 1,000 crores in revenue by FY30, with a near-term target of 800 crores in 5 years. With strong OEM discussions and a 16% CAGR, which is compounded annual growth rate in the domestic sunroof segment, till FY27, Gabriel is well positioned to leverage demand and expand its market presence both domestically and globally. So that was the two companies that we covered for today. We'll be reviewing some of the previous picks that we had covered in our previous editions of the Noisemaker. The first company we covered was Care Rating. Well, it is up approximately by 12.4% from the date of our coverage. Next up is Alpex Solar Limited, which is up approximately 6.9% from the date of our coverage. Third is Dalmia Bharat Sugar, which is down by 2.3%. Fourth is Power, and lastly KPI Green Energy, which is up by 8.9%. Note that all the changes in the price of the stock is from the date of our coverage. Now to summarize what we have covered for today, first up was Edelweiss Financial Services Limited. Well, the company saw a spike in its delivery volume after cutting its wholesale NBFC exposure and borrowings, signaling a strategic shift toward a leaner, more profitable operation. Next company we covered was Gabriel India Limited, which reported strong revenue and profit growth in a Q4 FY25 result. which was driven by new product launches, global market entry, and tech partnerships in the auto and solar segment. Well, that was it for today's edition of Noisemaker. If you found value in this breakdown, don't forget to check out the full report linked in the description below. We'll be back soon with more market insights and updates. Until then, stay curious, stay informed, and stay ahead. And if you like the video, don't forget to share and subscribe. Thank you.